You know, for over 200 years, the ultimate insider's ticket to American capitalism wasn't some hot stock tip. It was a literal seat on the New York Stock Exchange. It was this incredible symbol of power and prestige. But here's the thing. Today, you can't buy one, not for any price. So what happened? Let's dig into the story of how this super exclusive club got started, how its value skyrocketed into the millions, and then, poof, why it basically vanished overnight.
All right, here's how we're going to break it down. First, we're going to unpack what a seat actually was. Then, we'll go way back and trace its origin story, which, you might be surprised, starts with a simple agreement under a tree. After that, we'll follow the money, looking at the insane swings in a seat's value. From there, we'll get into the dramatic end of the whole seat-owning era, and finally, we'll take a look at how that old, chaotic trading floor stacks up against the super-fast digital exchange we have today.
Okay, so let's get right into it. What was this legendary seat on the exchange anyway?
And no, before you ask, it wasn't usually a physical chair you could just plop down on. Nope, it was something way, way more powerful. Let's break down what that membership really meant.
Okay, so here's the simple version. Owning a seat was basically your golden ticket, your license to trade stocks directly on the floor of the exchange. This puts you in one of two spots. You could be a floor broker, making trades for your clients, or a floor trader, using your own company's money to make bets. Either way, you are right there, in the absolute heart of the action.
But here's the kicker. This was not just a financial thing. You couldn't just roll up with a suitcase full of cash and buy your way in. Oh no. Prospective members were seriously vetted. They looked at your character, your reputation. And once you were in, you were under a microscope, constantly being watched by the NYSE and government regulators. It was a true members-only club, and it was built just as much on who you were as it was on how much money you had.
So, how did this whole exclusive club even get started? Well, to get that, we have to go back to its beginnings, which are, believe it or not, surprisingly humble.
It all kicked off back in 1792 with something called the Buttonwood Agreement. It was literally a pact made by a couple dozen guys under a tree. Pretty wild, right? Fast forward to 1869, and that informal group had turned into a formal system with a fixed number of seats, actual assets you could buy and sell. Then, just 2 years later, things really got cooking. Trading changed from this slow, one-stock-at-a-time call market to the simultaneous, loud, frantic open outcry system that we all picture when we think of the old trading floor.
All right, so once these seats became something you could actually buy and sell, their price turned into this fascinating thing all on its own. It was like a real-time barometer for the health of the entire U.S. economy.
And when I say barometer, I mean it was a total roller coaster. Just look at this. In the roaring 20s, I see its value shot up to a staggering $625,000. Then, the crash of '29 hits, and boom, it plummets to just $68,000. By 1942, deep in the middle of World War II, you could snag a seat for a mere $17,000. The price was a direct mirror of Wall Street's confidence, or its total lack of it.
Yeah, for over a century, the price wasn't just some random number. It perfectly tracked the crazy highs and devastating lows of the American economy. And then, in 2005, right before the whole game changed, it hit its all-time peak, an unbelievable $3.5 million for one single seat.
So that's the big question, right? If a seat was worth millions in 2005, why did the entire system just disappear a year later? Well, this was the moment that changed absolutely everything.
In 2006, the world turned upside down for the NYSE. It went from being this private, exclusive club to a publicly traded company. And with that one move, these 1,366 individuals became the very last of their kind, the final owners of a seat on the New York Stock Exchange.
So what happened to them? I mean, they didn't just get a handshake and a thank you note. Far from it. Each of these last seat holders got a pretty massive payout. We're talking almost 80,200 shares in the new NYSE company, a cool $300,000 in cash, and over 70 grand in dividends. It was basically the golden parachute that officially marked the end of an era. And that brings us right up to the modern era. I mean, the exchange itself is obviously still there, but the way it works now is just fundamentally different from how it used to be. Just look at the difference. The old private club is now a public company. Those super exclusive seats, they've been replaced by annual trading licenses that, anyone with the money can lease. And here's the biggest change. That frantic, yelling, physical trading on the floor has mostly given way to the silent, lightning-fast speed of algorithms and computers.
The trading floor technically still exists, but trust me, it is a much, much quieter place these days.
And so that leaves us with this final question. This whole shift to digital trading has, without a doubt, made markets more efficient and accessible than they have ever been. But in losing that chaotic, human-filled trading floor, that exclusive club of members, you have to wonder, what intangible piece of the market might we have lost for good?